An all-time high was made today on the Nasdaq, an all-time high closing on the index. It closed at 18,713. The index was up 146 points today, or 0.78%. You can see the volume is 25% above the average daily volume, 50-day average daily volume. So when your index is making a new high, that's obviously really bullish. I've been talking for weeks about how the mega cap tech stocks are set up, and I think that's going to drive the NASDAQ higher, and more on that later. But if you're just, bear with me here, if you're just looking at an index like a stock, you'd say that, okay, made that high on 671 on July 11th. It consolidated in a base for, more than 4 months, and now here it is breaking out of this box. So that is nothing but bullish here. New highs after consolidation. After the big run, what did it have to do? It had to consolidate gains. We see stocks doing this all the time. That's what the index did. After the 4 months of consolidation, it's moving higher. 4.5 months, I guess. Anyway, it doesn't matter. What really does matter is that it's trending higher. It's in a power trend. It's making new highs. So your stocks are going to be doing well if you select the right ones. It's not a automatic. You still have to be selective. And you can see the index is now 4.4% above the 50, 2.1% above the 21. So not overheated. And I'm going to get more into my thesis here. But I'm going to hold off here a minute. Well, I guess I'll show you the Dow Jones Industrial Average because I'm talking about how the Nasdaq was lagging while the Dow Jones was leading, and now the Nasdaq's making new highs and it's leading while the S&P and the Dow are kind of lagging. So anyway, I'm going to get into the reasons for that, but I have a lot to get to today. And I have to get to the earnings because that's what drives stocks higher, earnings. And when we have new earnings reports, new, quarterly reports, we get new leadership. So you have to pay attention to these companies that are reporting because they're taking market share, they have new products, or something is going right with these companies, and they're making these earnings reports and they're being rewarded. So that's what we want to see in an uptrending or a bull market, if you will, is earnings being rewarded, strong earnings being rewarded, and poor, weak earnings being punished. And that's what we're seeing. Anyway, I'm going to start off here with the medical biotech stock, WGS. This thing was up 50% today with that type of volume. That's a move not to be ignored. And if you've been following me at all for very long at all, you can see this bull wedge pattern back to moving average pays off once again. I mean, this is an anomaly, a 50% move. But you know what I'm saying? The ability to move higher, pull back to a moving average, and then blast off again. That's very common in what we've seen in this current rally. So really, instead of buying stocks set up in bases, you could just buy stocks pulling back to the moving averages, or you can do both. But they're both working right now. A lot of stuff is working. THC pulled back. This is the Tenet Healthcare, the medical hospital stock. You can see how it sold off here, sliced its 50 last week. And today, actually, that's Monday. Yesterday I had an inside day, and then today popped 17%. So still needs some work to get back to that 171, but a nice start today and 103% earnings growth. That's going to help. It went from 60 to 103, not bad. So that's what you want to see is accelerating earnings growth and sales growth. And RCL, like, if you follow me at all, you know that this is my boomer play. Boomers are taking money out of their 401k and they're going on travels, they're going on cruises, they're dining, wining, dining, staying at hotels, Airbnb. They're spending their money, they're not leaving it to their kids. And anyway, this is that's my story, and I'm sticking to it. This is RCL, Royal Caribbean. It's a cruise liner with their brands, their Royal Caribbean brands. Anyway, big move today with volume and 17% sales growth and 35% earnings growth, and it's nice response there, up more than 3% with that new data. CDNS, this is a welcome sight to see. This one's been beaten up, obviously, but this is a semiconductor designer, and they reported a 30% Earnings growth, 19% sales growth, and you can see the thing popped 12.5%. So when people say fundamentals don't matter, earnings don't matter, it's all on the chart, blah, blah, blah. No, earnings matter. And you can see, I'm just going to go through this. I went through them last week. I don't want to do this every day, but I do just want to show some stocks that, that earnings mattered for these guys. This is FFIV, Internet Network Solutions stock. Once again, it ran higher, as it broke out of that base and pulled back gradually, gently, with lighter volume here under the average, and then popped a nice 10% move. So that's a move not to be ignored for FFIV, F5. NARI, this is a stock that I used to pay attention to. It's a medical product stock. IPO'd. When did it IPO, Marty? Come on. Okay, 2000. So that's when, the go-go days when everybody is hot and bothered and everything was going up. This thing has obviously slowed down and sold off, but popped nicely today. I mean, a 15.5% move, 21% sales growth. I don't know what's going on with the earnings there, but the stock was rewarded, and now it's above the 200. CWH, this is Marcus, I forget, Leomonis? I forget, Lemonis? I don't know. Anyway, nice pop here on his earnings. Yeah, up nearly 7%. So just showing you some strength here. Nice moves. Some of these stocks have really sold off, so a lot of bad news priced in, and then they report something, worse than feared, and it goes up higher. This is TREX up 6%. Glowworm, Corning, GLW. Man, this is a thing of beauty here. You got the cup with handle, then it kind of stalled because of earnings, right? The stocks get cautious ahead of earnings oftentimes. And this one formed a little shelf as it, allowed the 10 EMA to catch up. And today it popped nearly 5% with volume. It's got the 20% earnings growth and increasing sales growth. So that's what you want to see from the glowworm. CVLT, this is Commvault, computer software database. It's is in with the Microsoft group. But anyway, traded at a new high today, up 24%, with increasing sales and earnings growth. 8, 18, 19, that's accelerating, right? 13 is higher than 10, 16 is higher than 13. So I guess the sales are going up too, and the stock's rewarded. Nice move there, 24%. Do I own it? No, I don't. I wish I did, but that's a nice move. And I'm just pointing out strength here following earnings report. This is a medical biotech stock with real sales and real earnings. You can see next year expected to earn $5.71. They reported and broke out. And when you talk about power through the pivot point, that pivot point right there is $70.36. That is some power through the pivot there. So obviously, that bull wedge pattern, once again, pulling back to the moving average on, really light volume. And now we get the pop. So let's see what Insight looks like on a weekly. Man, that is a nice breakout. Ooh. That's a thing of beauty. All right, I'm going to move on. OPRA. I got to be honest, I don't know what some of these stocks do, internet content stock, but once again, power through the pivot here. A 1725, 10% move with over 500% above average daily volume. That is the recipe for, a gap higher. And you can see that on the daily chart, the double bottom base pattern here where it broke out. There it is on the weekly, the double bottom, then bam, nice move. When you see that RS line go through the moving averages and it's got the blue dot there, that's a sign of strength. 7% above its 52-week high. So very nice move for the Norway-based company. All right. Some other ones, Hayward. I wasn't going to show this one, but it's a swimming pool. You think, man, it's wintertime. How could a swimming pool stock be doing well? But hey, they're showing accelerating sales and earnings growth. The stock popped nearly 6% and still trading there near that standard buy point. SOFI, this is Anthony Noto's company. You got to look at the weekly here. I think this is really looks pretty, for chartists. I'm more of a fundamentalist than a technical guy, but technical traders got to say, man, that's a nice looking breakout. Still down, what, 4% this week? I don't know what happened yesterday. Oh, that's today. Okay, big sell-off. Okay, all right. So SoFi should be in the PayPal category then. Yeah, selling off on this data. What is this here? So PayPal, you're getting decelerating sales and earnings growth. And how did SoFi do? Um, wow, no, they had accelerating sales and earnings growth. So anyway, the weekly chart looks fantastic. That looks really good, but oftentimes, you need to form a handle. When they come straight up from the bottom like that, they need time to form a handle. So I don't think the company's doing anything wrong. And that pullback to the 21 EMA is not the end of the world. Oftentimes you get these reactions like that, like we saw with Vertiv last week, and then it proceeded to make higher highs. This is yeah, the 21 EMA, $9.77. So it came right down. You can see the low there, $9.77. So very interesting. Came right down to the 21 EMA by the penny, and it closed 68% of its daily range. So maybe look for some I don't know, shake out there around the standard buy point. That one could appear on my ready list here pretty soon. The maker of Vans, the the shoes, shoes are a mess right now. Decker's good report, Crocs not so much, and Skechers, I don't know, it's all over the place. But the maker of Vans was up 27%. The earnings not great, just better than feared, right? It was feared a disaster, and you could see the move higher out, trying to emerge out of this stage one base. So Vans is looking good. And the last one is Harmony, another one of these biotech stocks, with sales, with earnings. You can see that down here. And expected to earn $3.28 next year. It's a $40 stock. Anyway, it undercut the 50, now rallied back through it. So that looks pretty damn good to me. As long as it's above $40.60, that looks like a nice move. Okay, they're not all roses and sunshine here. We have some real dark clouds. Some the Grim Reaper came for some stocks today. One of them was TMDX, and I mentioned when growth stocks stop growing, it's disaster. These things are not going to grow to the sky. And even though it had 64% sales growth, it's down from prior quarters. You can see 159, 133, 118, 64. We know it's not going to grow triple digit sales growth forever, but I think this was a surprise. They maintained their forward guidance, but it wasn't enough. There's a big misses on the top and bottom line. A 30% haircut. Wow. What's the market cap? Less than 3 billion now, but it's only doing half a billion in sales. So it's still trading at 6 times sales. So it's still not a cheap stock, even though it got hammered today. So a lot was priced in there. They were expecting big growth. They didn't deliver, and you can see, when, like I say, when growth stocks, stop growing or slow their growth, it's a disaster. And I showed you the example last night with Crocs, one that I held into. They just don't grow up forever. Anyway, mentioning Crocs here. Same old story for these guys. HAYW is just a albatross around this company. The core Crocs brand is doing well, especially doing well overseas. HAYW, seasonal brand. I mean, they don't have anything on inventory in their catalog to compete with UGG's brand for the wintertime. So retailers don't want HAYWs in their shelves during the wintertime because they're not going to sell. It's a summer shoe, spring and summer and fall. So Crocs are fine, but HAYW dragging it down, and it was down nearly 20% today. Right back down to that 112.50, just right. So, probably do something like this for a while. This is not, there was not a lot of growth expected. They actually, did, 11% last quarter, 12%. So there was not a lot of growth expected here, and it's a super cheap stock, 6 billion in market cap for about 4.5 billion in sales. What are they? They're doing that more than that now. So it's trading just a little over one-time sales. So it's not a lot of expectations, but it got hammered, and that's all that matters if you own it. This is Ford. Ford's having a rough go of it. It was down 8% today. I don't know. There's not much to say here. It's still, like CROX near the low of its base here from 14 down to 950, we'll call it, and still, $10 stock. So it's got a lot of work to do to get through all the moving averages. That looks pretty ugly. Anyway, I'm going to stop there with all the earnings. We have more tonight, which I'll get to, and then more tomorrow morning, which I'm interested in, which I'll show you. But I'm just going to go through a couple of groups, which I do, normally when I don't have earnings. But you just got to pay attention to these earnings, because when you see these stocks moving 10, 20, 30% with what big volume, that could lead to higher prices, and usually does lead to higher prices. So that's why I took the time to point them out. I'm trying to point them out during earnings season. Maybe tomorrow I'll keep it to maybe 8 or 10 stocks. Anyway, today app 11 was upgraded. I forget who upgraded it. It doesn't matter. But I think the price tag was a 200 or 210. It's been getting upgraded like twice a week. And it's just a Cali Slater stock, surfing the 10 EMA. Wow, it closed at 172 today. Whew, I hadn't looked at that for a while. I noticed in the morning it was up $3 or $4. Yeah, it really took off midday. I was with my dog trainer today, so I wasn't really watching the market that closely and had to catch up when I got home. So anyway, yeah, it's a nice move for app. That is my largest holding right there. Spotify, I've had this one on the ready list. And I had it back here and it didn't move. I think people got tired of it. I got tired of it. And then finally it moves. Now it forms this little shelf pattern here and broke out of that shelf today. Let me see the daily chart, or excuse me, the 5-minute chart. Yeah, nice move. Higher ramping, and then sold off into the close. But I'm not going to say that is let me just say, I think this is going to challenge 400 instead of, going back towards the 10 or the 21. That's just my story, and I'm sticking to it. You got to have expectations. I'm not predicting, I'm just expecting. Just like I'm expecting Duolingo to challenge at 300 and break out of this little shelf pattern that it has going here. It allowed the moving averages to catch up. It traded down to the 21, bounced higher. Now it's above those moving averages. So that's why my expectation is it's going to challenge at 300. I don't know if it's going to get rejected like Mutombo, or it's just going to, blow through there like poop through a goose. I don't know. You just got to wait and see, but I do think it's going to challenge 300, sometime this week. And you got to watch for earnings. They're going to report earnings on Wednesday. So if you own stocks, which we all do, that's why you're watching this video, you have to pay attention to your earnings reports, or you'll end up something like TMDX or CROX, or I didn't show you Boot Barn. Boot Barn was down 20% too. That thing's worse than CROX. So pay attention. You don't want that. That's painful. It's very painful for the portfolio. I'd cry if I owned that thing. Boot Barn, just, I mean, it's like I said, the shoe apparel is just a mess. This is a Zoom video. I think we need to pay attention to Zoom here. This one was up 9 days in a row, pulled back one day, and now it's up another 2 days and broken out of that stage one base. I know it's a Cathy Wood stock or whatever. People want to stay away from it. But you can't deny, a bottoming pattern and breaking out of a stage one base. That's what it's doing. I'm not saying go out and buy it. I'm just saying there's a stage one base there. 3 weeks tight pattern. That could show up on our ready list. Why? Well, because it's above its moving averages. I know it's straight up from the bottom and it's extended. I like it closer to the moving averages. I like it closer to that 72.36. But as Mick Jagger saying, you can't always get what you want. And we're going to move on here to the food stocks. Dash. I think I've showed Dash like every day the last couple of weeks. Obviously, I like this stock. It's just got the look of a big winner. The cup with handle breakout, surfing the moving averages. Once again, though, earnings tomorrow. So if you own it and you own a lot of it, let's take a step back here. And that's what I'm talking about. The IPO and then the bear market. Now it comes out of the bear market like it's due diligence phase, and now it's into its advanced stage. So I think this thing can advance more. I'm not saying it's going to blast off with earnings or anything because it's extended. But I think over time, this is definitely one to watch. for a bigger move. What other food? Oh, yeah, Maple Bear, CART, C-A-R-T, Maple Bear, broke out and now it's trending higher as well. It's just got 11.5 billion market cap, not big like DoorDash, but still behaving well. Sprouts Farmers Market, another Kelly Slater stock trading tight. We like tight trading. We don't like the wild one. I don't like the wild ones. Some, day traders do. But man, I don't like them wild. I like them tight like this. Nobody talks about Sprouts. It's just going higher. So shh, don't tell anyone. 120 after hours. We'll take that. What a move for this thing since the breakout. What other ones? Oh, another food stock is CAVA. They took the day off today. The retail restaurant names CAVA just pulled back to the 10. No harm done there. That's doing its Kelly Slater thing there, surfing. I should use Bethany Hamilton, or I should get expand my repertoire with female surfers as well, because I'm sounding kind of chauvinistic here. Anyway, not that I care. Let me see. Let's move on. Oh, I wanted to show Brinker. This is the one that's been super strong, and they report earnings tomorrow. Oh, wow. I was going to get to that later. All right. I digress. Raymond James, the financials have been moving. I haven't been showing them every day because there's just so many stocks in rotation. What I do the first hour of the day is I watch when I have time and I'm able to watch. I just want to know where the rotation's going for the day. Is it going to financials? Is it going to, defensive names? Is it going to software or hardware? Or, it's going somewhere. In a bull market, it just rotates around. And it has been rotating into these financial names, obviously. Raymond James making new highs. But I don't show these charts every day, because I'm not there's just too much to show. Basically, I can't show every sector that's doing well. It would be a 2-hour video, and I don't have the attention span for that. IBKR, Interactive Brokers, man, that one made the high, pulled back to the 21, and now it's heading up north again. So Interactive Brokers looks pretty decent. SF, which is Stifel Financial, another one that looks good, and then Fiserv, yeah, another one. These things are strong. I think Wells Fargo made a new high today. I mean, Wells Fargo is making new highs. That's well, it says something about the group. Morgan Stanley was, one of the, yeah, that thing looks pretty good. Once again, that wedge pattern back to moving average. You got to watch that. And then JP Morgan, kind of the king of these 634 billion market cap, set up in a base. That's kind of a thing of beauty right there. So that could show up on our ready list soon. But this is not one that's going to just take off and fly high. This is more of a slow mover. But I like that around 225, definitely. JP Morgan, good looking stock. Anyway, that's it for the bank stocks. I got to get to construction. I got to be fair. I haven't talked about construction for a while. And this is Knife River, the concrete stock. They're going to report on the 4th, which is Monday. So beware if you own it. But, very consistent pattern here. Since the breakout, it just pulls back to the moving average, right? So you embrace the pullbacks. Dips are bought, strong stocks in a strong market, dips are usually bought. Once again, it, rallied up, pulled back to the 21, made that little bull wedge pattern. Now it rallies up and it's got earnings on Monday. So we're watching you, Knife River. STRL, another one of my favorites in this building, heavy construction group, pulled back to the 10 and then rallied higher and now pulled back to the 21, but they have earnings on the 6th, which is next Wednesday. Quanta Services, another one in this group that I like. They report Halloween, which is Thursday. Just surfing the moving average. It's great. Jacobs Solutions, another one looks fantastic. Since the breakout, the bull wedge back to the 10, rallied up, the bull wedge back to the 10. But now you got earnings is on the 19th, so you got a couple of weeks. So that one looks fantastic. All right. Okay, I've got to get to the semiconductors. Usually I do these early in the program, but I'm getting to them late. And this is NVIDIA. This one's going to move when it wants to. I know there's a lot of eyeballs on this. A lot of people own it. It's going to move when it wants to, not when you want it to. It is forming this little bull wedge pattern right at the 10. This is a thing of beauty right here. Sure, it could fail. It certainly could fail. It could, it's a late stage base. So you got to, like I say, you got to be from Missouri. You got to show me, and it's got to break out. But right now, that chart looks fantastic. I've had it on my ready list for a while. If you didn't get it at 100, and if you didn't get it at 120s, now's your chance at 140. All right, another couple arm. Sold off last week, and this is what I mean it was on the news of help me out, Marty. Oh, Qualcomm licensing deal, yeah. So it rallied up, pulled back, rallied up, pulled back, rallied up, sold off. That Qualcomm deal, didn't help it, but all it did is pull back to the 50, found support. Now it's up the last 3 days, so it bounced nicely off the 50. And if I just go back to like maybe a 10-minute chart, yeah, there you can see the bounce. There's the 50, and then it just whoop, whoop. Today had a nice day, heading higher. And so, yeah, I like ARM. I had it on the ready list last week, but I took it off this week. It still has that standard buy point, though. Nothing changed. I just took it off because I wanted to limit the number of names that I had on there. But yeah, I still like ARM a lot. This is another one that I like a lot, an IPO base. ALAB, CEO's, co-founder of the group. This is still, I believe in its due diligence phase, but could be entering its advanced phase. 22% off that, essentially the IPO high where it rallied up. But to me, this is looking good. Broke out recently, made a high of 74. Well, I should go back even further than that because it rallied up from the bottom, 36, pulled back to the 21 right here, that bull wedge pattern, gapped higher, pulled back to the 10 and a little wedge pattern, and now is rallying higher. So this thing to me just looks like higher price. As long as that 10 is going higher and it stays above the 10, guess what? You're doing good. All right, the last group that I want to mention is the Bitcoin related digital currency markets names. This is MicroStrategy. They report tomorrow, so be careful if you own it. Yeah, it just made a heck of a move off the lows. I mean, I could see this thing coming back, even on a good report, back to the 21. No harm done if it does that. That's a hell of a move. 113 to what was it up today? Like 270? I think it was up 268, 267. Yeah. So big move there. Hood reports tomorrow as well. Yeah, this thing looks fantastic. And then coin looks more actionable out of these, but I just got to wait until they report. I'm not jumping in ahead of earnings because you don't have to. Too many other things working well. Bull wedge back to the 10, then bouncing. So we'll see what they have to say tomorrow. You got to wait. All right, that's it for me. Thank you for watching. But I do have one more thing in honor of the great Stephen Jobs. One more thing. Google. I talked about how these mega cap tech stocks are set up in bases and they've sold off. They're not even close to near highs, new highs. So a lot of bad news was priced in. They had a little battle with the government, and so I think that's kind of behind them. They reported tonight up, yeah, this thing looks fantastic. 169, if you didn't get it there, got a gap to fill here. I think this is the type of stock you want to own in like I don't know, an IRA retirement fund. Yeah, 180, 154. It's almost there after hours. So, the standard buy point's 190, 175. I hate buying stocks that are extended, but if this thing's going to gap higher, it had a really strong report. First of all, yeah, they delivered a really strong report. So that's this jumping off point, How much will it be rewarded? We don't know, but it does have that gap to fill there above 180. So we're just gonna have to wait and see. I'm very encouraged by this move, though. You can also buy the QQQs or the TQQQ or whatever, but so we saw Tesla, Netflix 2 weeks ago, Tesla last week. Now we're seeing Alphabet today. And tomorrow we have Microsoft once again set up. It's very similar to Google here. A lot of bad news priced in. It's up on that Google news. I got to believe this is And if you don't own it, it's pretty tough to buy heading into an earnings report. Just wait for the news, and if it's good, you could buy it afterwards. But maybe 1% position won't kill you. But I just like the way these things are set up here. Meta setup. This one a little different setup, because it just made that new high and pulled back to the 21. So this is one of the stronger names of the Mag 7. Popped today, and it's going to pop tomorrow on that news. And they have earnings tomorrow, but man, I like the way all of these are set up. Every darn one of them. Amazon, another one. These 7 stocks look fantastic. Just flattening out, more making that shelf pattern here along its moving average, kind of pinching in here, man, that looks fantastic to me. Apple has been pretty strong as well, near the high, flagging here. Another one that I just think looks set up to move higher. So this is my thesis. I've been saying it for a couple weeks now, why I believe the Nasdaq is going to start taking the lead, and Dow Jones and the SPY are going to start to lag the Nasdaq because these mega cap tech stocks are just, they have the resources, they have the wherewithal to, kind of wipe out their competition, and, just have their CapEx spending for AI, and they're going to be the leaders in that space. So you can't ignore them. It's a big fish that are just eating up the little fish here. One of the ones that I wanted to show, I mentioned Tesla, which reported last week. Nice response there. 264 buy point. It's just pulling back, allowing the moving averages to catch up. That's a hell of a move. Like I said, when you see that RS line going through the moving averages, that's just another indicator of strength. And when they're near buy points, to me, it's kind of like a buy. If you want that type of stock, some people don't like that type of stock. Anyway, I did mention NVIDIA, the last of the Mag 7. This is one of the best looking charts I can find. That's why I've had it on my ready list for a while. So anyway, I did mention earnings. Reddit. I got Google. I'm going to go to Reddit. Reddit had a nice response. It was up over 100 in after hours, but yeah, 20% move. So somebody likes their earnings report. And you can see this one is set up in an IPO base, and it looks like it wants higher prices for sure. So maybe it'll start its advanced phase, institutional advanced phase, with this new data. And like I say, when you get new data points, you might have new merchandise that are new leaders in this next, as we rally into the year end and into 2025. This could definitely be taking leadership in one of the stocks that you want to own, like an Apple Oven was last quarter and has been, leader for a long time. So yeah, Reddit looking fantastic. AMD, not so much. I saw some of the report. I was a little surprised that it's down 7%. It wasn't all that bad. Data centers are killing it. The report was fine. It's just their forward guidance was light. And a lot of companies do this. They report light and then they get hammered on earnings day, and then they gain traction as they start getting approaching to their next earnings report. And then they sell off and then sandbag, CROX does that every quarter. They just sandbag. Elf is another one. They don't want to have high expectations for themselves. So they lower expectations so they can jump over that bar and beat it and say, woohoo, we beat EPS, but we're going to lower guidance for next quarter. So they're getting hammered for lowering guidance. And, if she just gave inline guidance, it would probably wouldn't sell off like this, but she was conservative. So AMD is going to get hit tomorrow. That might impact your NVIDIAs, your, Qualcomm's, your ARM, ALAB, whatever, the semiconductor cohort might. Visa is a steady Eddie. Since it came public, I mean, you tell me, it's just a one-way stock. It did have this little institutional due diligence phase here, but once it hit the advanced phase, it's only been advancing for like, what, 15 years? So that's a great one for your retirement fund as well. A good one for your retirement fund. Doesn't pay a big enough yield for me to say great, but a good one. Snap, they beat on top and bottom lines. Yeah, it's up 6% after hours. This one's been beaten down. But congrats to Evan Spiegel and the management team at Snap. So they beat, they're going to get rewarded. So good for them. Chipotle Mexican Grill. This is the first quarter without Brian Nichol, their old CEO. I think it was their same store sales. It was slightly below, but it doesn't look too bad. I don't know, down 4% to 58. Not bad. I mean, they split what 50 to 1, so it's going to be a slower mover, but you can see it's just forming a base here. This big base from 69, because that was what, back in July, I believe, June 18th. So that's a pretty big size base, and it's just kind of going sideways and forming this shelf type pattern there. No big deal. I don't think for it to be down $58. The low here was 55.94. So within the shelf, it's still going to stay within that trading range. That's it for Chipotle. Uh-oh. QRVO just getting mauled after hours. The Grim Reaper is coming to give this guy a haircut, 15% lower. We'll see how it responds tomorrow, but I didn't look at the data. I'll have all this tomorrow morning when I have my pre-market report. Anyway, that's it for me. Except for I do have one more thing tomorrow. Look for earnings reports from Lilly. I think they're going to crush it. Yeah, they're going to crush it. I don't know how the stock's going to respond, but the weight loss drugs are just still red hot, and they're going to continue that for a long, long time. Caterpillar. Ooh, I like this pattern. I don't know what's going to happen tomorrow. I have no idea, but we've seen this pattern a lot, a lot, a lot lately. This little bull wedge pattern back to the 21, they report tomorrow morning. So we'll have to wait and see. And then Humana is another one that I'm not looking forward to. One that will drive the medical managed care group, which is like United Healthcare. What else is in that group? Like Cigna. Yeah, so Molina Healthcare, so it'll it'll impact that sector. And then the last one I'd mentioned earlier, Brinker International Eat. This will likely have somewhat of an impact on some of those restaurant names. It's been such a big winner recently. I would expect, even with a good earnings report, that it would pull back at least to its 10. But we'll have to wait and see what they have to say. Brinker's just been on fire. That's the Maggiano Chili's stock, and that might impact Sweet Greens and CAVA and Wingstop and Texas Roadhouse. We'll have to wait and see. Anyway, thank you for watching at mcstockcharts.com. We never give up, ever.